2021, it has been a difficult year. The second wave of COVID-19 brought the nation to a standstill and dealt a severe blow to the economy. But things are on the mend, and leading the recovery is the new economy. Hello and welcome to Rewind 2021. I'm Shireen Bhan. India's unicorn club doubled in 2021 with more than 40 startups crossing the billion-dollar valuation. More than 60 companies went public and the IPO market has been buzzing for the last few months. Will the euphoria continue? Mugdha Varia reports on the year that was for startups in India.
2021 was undoubtedly the year of unicorns. In fact, so many companies became unicorns this year that some people have begun questioning whether the tag itself is appropriate anymore. 2021 has seen more than 40 startups join the unicorn club. This is more than 4 times the number of entrants in 2020. And together, these new unicorns raised in excess of $12 billion in funding, according to startup ecosystem tracker Venture Intelligence. And in all, the 80-odd unicorns in the country raised around $26 billion in funding through the year. The money seems to have flowed pretty much across the board, while the favorites like e-commerce, fintech, SaaS, edtech continue to attract investors. The newer and emerging areas like cryptocurrencies, gaming, D2C also seem to have raked up quite a bit of interest. But old or newfangled, the excitement in the startup ecosystem is palpable, and every newly minted unicorn says that their growth strategies, their aspirations, the summits climbed, the milestones achieved, all boast of one common factor: India's digital ecosystem that continues to grow at breakneck speed.
India is a small business economy at the end of the day, right? 90% plus of all commerce happens through these small mom and pop or small businesses across the country. The real Indian economy still hasn't come online, and we especially want to aspire to get that economy online.
We are proud and humbled to be India's first crypto unicorn from the crypto space. I think this is a big milestone for the business and for the crypto community as a whole.
India's time in the D2C space is here, and this infusion of equity and our unicorn status should certainly open up the floodgates.
What sets 2021 apart from previous years is not just that startups have had to work in an environment where, even as green shoots emerge from the worst of the pandemic-induced lockdowns, there is uncertainty and trepidation, a change in the consumer's needs and behavior, and a shift in the speed and kind of response businesses are required to provide. Most apparent is the fact that an accelerated digital adoption during the pandemic has resulted in a much shorter time for a company to attain the unicorn status. For instance, Mensa Brands, which is building a house of brands, became a unicorn within just 6 months of starting operations. Investors credit this to a scenario where many startups are registering accelerated revenue growth, and some are achieving profitability that justifies their ability to command such high valuation jumps so quickly.
In the case of Mensa, there was real revenues that they acquired, right? So it's a very unique model where you kind of accelerate through capital, the aggregation of brands.
Global investors have had a field day through the year. Top angel and venture capital investors have seen their investments multiply with ease, and as the year comes to a close, notable names like Tiger Global, Sequoia Capital India, SoftBank and Axel India can boast of holding in their portfolios the most number of Indian unicorns.
Just on this year alone, we have invested $3 billion into India. Okay? We are the biggest foreign investor into India. We provide about 10% of the funding of all of the unicorns in India.
Strong revenue growth or changing consumer behavior are not the only reasons for the surge in the growth of Indian startups. India's unicorn boom has been aided by surplus liquidity, especially in the US markets. But 2022 may see some of the euphoria taper down, not just because the internet usage may plateau, but because the Fed's hawkish policy may put the kibosh on the easy money party. However, there is already a growing pipeline of unicorns or companies that are close to achieving the unicorn status. And more interestingly, 2022 may see the rise of decacorns as unicorns gallop past the next milestone, the $10 billion valuation mark. In Bengaluru, this is Mugdha Varia.
Well, from startups to semiconductors, these tiny chips are ubiquitous. From mobile phones to televisions to automobiles, they are used in almost every electronic device. According to an estimate by Deloitte, the semiconductor shortage cost the manufacturing industry $500 billion. Parikshit Luthra reports on how India's automobile industry coped with the semiconductor shortage.
The global semiconductor shortage wreaked havoc for the auto sector in 2021. According to ratings agency ICRA, Indian car makers could see a production shortfall of 5 lakh units in this fiscal. That could be an earnings loss of about 2,200 crore rupees. The current backlog of bookings is a massive 4 lakh units. Dealers have channel inventory of just 10 days, because of which customers have to wait for months to get their car. The Indian passenger car segment was particularly impacted during September and October due to lockdowns in Malaysia and Thailand. So why was the auto sector so rattled because of the chip shortage? For starters, an average car uses 80 electronic control units, each of which uses semiconductors. During the first COVID wave, there was overbooking of semiconductors from consumer electronics, computers, and the communications industry, which utilizes 70% of global chip production compared to just 10% chip utilization by the auto sector. So naturally, there was a greater diversion to the electronics and the IT industry. And when the car production bounced back stronger than expected after the first wave in 2020, there was a shortage of chips for the auto sector. Now, what made matters worse were a string of disasters. Fukushima earthquake leading to closure of Japan's Renesas semiconductor plant in February, fire in the Renesas plant in March, Texas snowstorm leading to closure of semiconductor manufacturing units in Austin, and closure of semiconductor foundries in Malaysia and Thailand due to COVID-related lockdowns. All of this led to the worst festive season for auto dealers in a decade. Shortage of chips meant that industry could not produce as per demand. In fact, according to Federation of Automobile Dealers, this 42-day festive season was the worst they had in a decade. And they lost about 2.4 lakh units in retail sales because cars were just not available in the market. Companies were forced to make big production cuts. In fact, Maruti Suzuki, India's largest car maker, had to slash production by 60% in September. There has been some recovery, and production shortfall for Maruti is now about 10 to 15%. The company says pandemic-related uncertainties will continue. Tata Motors said it had to face a production loss of about 60,000 units due to COVID-19 and semiconductor crisis, and would have lost close to 1 lakh units in sales volumes due to the chip shortage. The company believes the semiconductor production is extremely uncertain, with no firm outlook by key suppliers. Finally, is a recovery in sight? So Bosch, which has set up task forces to deal with the chip shortage, says the situation cannot be expected to improve anytime soon. And the global auto sector will be confronted with the chip shortage for months to come. Another major manufacturer of ECUs, Continental, has said that semiconductor crisis will continue throughout 2022 and beyond. Lead times for semiconductor chips is likely to be at least 6 months, and the company is now planning component demand for 24 months and 5 years for strategic components. So clearly, the semiconductor crisis is something that we'll have to live with in 2022 as well.
Well, that was the story as far as the semiconductor shortage is concerned. Now, 2021 also saw the largest congregation of countries to tackle climate change. 190 countries were in Glasgow for the COP26 Climate Summit. We saw some progress with major agreements being signed to cutting greenhouse gases and ending deforestation, but there were some compromises, and many climate experts believe a lot more needs to be done. Andrew Sharma is here with the COP26 report card.